morning, everybody. Thank you so much for joining us today. In case you're not sure who I am, my name is Elise Fry, and I'm the Group Health Manager of our Health Plan Options Department here at URL Insurance Group. So please feel free to reach out to myself or anyone on my team for any group health assistance or just any health questions in general. So just a few housekeeping items before I hand this over. There is a chat feature that you will down at the bottom right where you can type in questions and we'll answer them to the best of our ability. And there's also a resources section to pull out any handouts. So now that we've gotten that out of the way, I'm excited to have Dena McVicker here. She's the account director at Colonial Life, and she's going to go over with us how benefit banks work and how you can utilize them for your business. So without further ado, please take it away, Dena.
Hi, guys. My name again is Dena McVicker. I am with Colonial Life. We do voluntary benefits, benefit administration systems, technology. If you do Employee Navigator, Ease, B-Swift, that kind of stuff, we do that. I've been with Colonial Life for a little over 25 years. And we have found in working with URL's team that benefit banks work really well in their groups. And we're going to kind of talk about what that is after we go through the basically what are voluntary benefits, just a quick overview on what those benefits look like. This piece right here, we kind of like to talk about. Nearly 70% of employees surveyed recently by LIMRA said that their benefits made them more likely to stay with their employer. So if you're not talking to your clients about voluntary benefits, you should. You should start thinking about how benefits fill gaps, how they help your clients attract and retain employees, and help you, quite honestly, get your arms around that client a little bit more. Nobody else from a voluntary benefits company is going to come in and talk to them if you've already done it. So again, we're going to kind of walk through what are voluntary benefits, what is a benefit bank, some myths about voluntary benefits that you might have heard. And when you have identified an opportunity, one of your clients says, hey, that sounds great, or can you get me some more information? What do you do at that point? So voluntary benefits basically are benefits that help employees pay for out-of-pocket expenses, whether that's related to their major medical plan. They might have deductibles at the hospital, at the emergency room. They might have a high deductible plan that's $2,500, $3,000, $5,000 that they've got to meet. So the voluntary benefits help the employee cover some of those expenses. You might also hear them called supplemental benefits, worksite benefits, voluntary benefits. Again, expenses like medical bills, household bills, travel expenses, missed wages. Many employees like the benefits like disability, accident, and hospital, and those benefits are paid directly to the employee so that they can decide where they need to spend that money after they, realize where their bills are, how much time they've had off work. Do they need to pay their rent? Do they need to, pay a car payment, pay the doctor, whatever that is. So the money comes directly to them so that they can use it as they see fit. The types of voluntary benefits, again, are accident, which pays for things like broken bones, fractures, cuts that require stitches, things that might land in an employee or one of their family members in the emergency room in the hospital. A lot of times if your spouse or one of your children has an accident, have time off work to get them to doctors, to get them to appointments, to get them back to follow-up visits, and you're off work for whatever that time period is. Critical illness is for things like heart attack, stroke, organ transplants. It's a lump sum benefit paid directly to the employee. where they might have a heart attack, have to be out of work for a month, have to have somebody come in and, remodel their home a little bit because they can't get up the stairs. They might have to have at-home nursing. So again, that's a lump sum paid directly to the employee to help them with those expenses. The cancer plan pays for things related to cancer, whether that is chemotherapy, radiation, if you have to stay in the hospital, if you have to have blood transfers, if you have to get prosthetics, that pays you through all the stages of cancer. We're paying you as things are happening. If the employee then goes into remission and gets cancer again, we start that all over again. The dental plan is something relatively new for us, probably in the last couple of years. Most companies that we run into do have dental plans, but we find some smaller companies that don't have it, want it, or companies that have a dental plan, but the employee has to work at least 30, 35 hours a week. So a lot of times we find companies that want to offer the dental for their part-time employees. Again, thinking back to how can I attract more employees here? How can I keep my employees here? That dental plan is generally the number one benefit that employees ask for after medical insurance. Disability is basically paycheck protection. So the employee selects an amount of coverage that they want, that they need to pay their bills, and then they design their own plan to fit, whether it's a 6-month benefit, 12-month benefit, if it starts after 7 days, after 14 days, very customizable for the employee so they can have what they need. Maybe they can't afford 60% of their income, but maybe they can afford 40%. So it suits everyone. It's not a one-size-fits-all plan. Everybody can get that plan at some level and get some coverage to help pay the bills. We do this a lot in small companies, but we also do it a lot in larger companies who maybe have a long-term disability plan that doesn't kick in until 90 days or after 6 months. So the employee's left with that gap until they reach that time period. The life insurance, we have whole life, we have term life. Again, employees pick and choose what they want, how much they want, how many years they want. If they're buying a term plan, do they want a 10-year, 15-year, 20-year? So very customizable, very affordable. I'll say that's one thing that I think more employees come in assuming that they can't afford and don't realize how inexpensive it is and how easy it is to get it, because this is through a group of people, an employer. It's not an individual. Somebody's going to come to your home and they're going to, need to have 600 pages of information from you. They're going to need to, get your blood, your urine, do a physical, that kind of stuff. None of that is applicable here. The hospital indemnity, also called a medical bridge plan, is designed to help with high deductible health plans. So you guys know, you do this every day. You go out and you talk about health insurance, and we've got to go from a $2,000 deductible to a $3,000 or $2,500, and we're going to add a $4,000 plan. Most employees that we sit with every day don't know where they'd come up with $2,000, $3,000, $4,000 all at one time if they had to. So this plan pays a lump sum to the employee based on, were they in the hospital? Did they have outpatient surgery? Did they hit the emergency room, doctor office follow-up, those type of things. And then the vision is a rider on the dental plan. Again, we have a lot of smaller companies that don't have coverage for employees as far as dental and vision, or would like something that they can offer to their part-time employees who can't get on the company benefit. So what is a benefit bank? A benefit bank is basically a bucket of money that the employers give to each eligible employee to use towards voluntary benefits like the life, the disability, the accident, etc. The employer will decide how much money they want to give to the employee, whether they tell us per pay amount or per month amount or an annual amount. So again, right here it says a benefit bank is an easy way for employers to control costs, because they're giving us a flat dollar amount, and that doesn't change unless the employer comes back and says, I want to give them $25 instead of $20 now. Employers give each eligible employee, again, a set dollar amount. It doesn't have to be a certain amount. They can decide that they want that benefit to be for any benefit, or they can say, hey, we really want to make sure that everybody has a disability plan. they need to use that for the disability first, and then they can use any leftover for anything else, or they use it on a disability, and when that money, if they haven't used it all, it comes back to the company. So there's 1,000 different ways to design this plan, honestly. I have found in working with Elise and working with Thomas on some groups that some of the smaller companies that we work with, and by smaller I mean maybe under 50 lives, are struggling to be competitive as far as benefits and hiring, and they're finding that using a benefit bank to expand their benefit package and say, hey, we offer disability, we offer critical illness, we offer the life insurance that you might find down the road at ABC company. They're using that benefit bank, they're expanding their benefit package, and it's their way of attracting and hiring better quality employees. So I think I probably have touched on some of these, but the advantage to the business is, again, to be able to expand the benefit package without adding to their bottom line as far as having to have a disability plan for everybody. You can also do these benefits, offer them without the benefit bank if you wanted to, or the employer can if they want to. If they don't have the money to do something like that, they can still offer the benefits to the employees and let them pay for the benefits through their paycheck. The benefits help control the rising cost of health insurance, again, to attract and retain skilled talent. Voluntary benefits works great for small businesses that want to be able to provide benefits that they can't get on a group platform. We have a lot of groups that are 5 lives, 8 lives, 10 lives that can't get a group disability plan or a group life insurance plan. So this is a great way for them to be able to offer those benefits. Low minimum participation requirements. So we only need 3 employees to sign up in a group to make it a group. That means we could have 1 do disability, 1 does accident, and 1 does life insurance, and we've got the 3 that we need. Normally, you don't see that with any other carriers, especially if you're looking at a group benefit where you need at least 10 or 12 or 25% of the workers with a minimum of 10. The options and the flexibility in the benefit plans, because we have so many different generations working in a company now, they don't all need the same thing. You can have somebody who's a millennial who's just starting to think about life insurance, and you can have somebody who's getting close to retirement who's thinking about life insurance, but because it's portable and they need something to take with them. The advantage to the employees is that it's valuable coverage, it's affordable. It's probably way more affordable than they think it is. And part of our process at the enrollment is to sit down with each employee and explain to them what the benefit is, how it works, and what the cost is. And that these benefits are all portable at the same cost if they change jobs or they leave this company for any reason. Again, we just said flexible benefit options to fit workers' needs. Filling in gaps in the major medical coverage is really kind of the beginning point when we're talking to a new group. What do they already have? We're not there to replace coverage, but what do they already have in place where an employee might have a gap in coverage? Is it in the medical plan where they have huge out of pocket, or they have a copay when they hit the emergency room now, or their disability doesn't start until after 90 days, or they have life insurance at the company, but they don't have anything for a spouse or children and they want to do something like that. This is a sample benefit bank flyer that we use here at URL that kind of starts the conversation with the employer, because when I go out and I sit down with them, first thing they ask me is, so if I gave everybody $20, what do they get? What does that mean? How does that look? What kind of coverage can they get for $20 or $25? Or if I'm just looking at a disability plan. So we can create these for you. Thomas and Elise both have one that they use that has their information on it. It's kind of an easy overview that's a great way to kind of start the conversation with them. Myths about voluntary benefits. That what we hear in the market all the time is that the voluntary benefits are not affordable for employees. So, if I had a nickel for every time an employer said to me, my employees can't afford that. They don't have any extra money out of their paycheck. They're not going to want any of these benefits. most of the time when we sit down in a group, about 40 to 50% of the employees will buy something because they don't realize how affordable it is. Like I said about the life insurance, a lot of times people think life insurance is unaffordable. They're not healthy enough to get it. They don't realize that they can do disability and cover part of their paycheck, and that can be done for, $10 a pay or $20 a month. And quite honestly, those people that the employer is telling me they don't have the money to do this are the people who are living paycheck to paycheck and need it most. The not enough employees to qualify. Again, we need 3 people in a group to sign up to make it a group. So I generally look at businesses that are 10 employees or more to get those 3. But I do have groups of 3. I have groups that are 7, that are 8, that are 5. So we do help a lot of small employers get the benefits that they need, and we also are helping their employees. Administering a voluntary benefits plan is costly and time consuming. What happens with voluntary benefits is we go in, we talk to the employer and say, here are the benefits. Here's what a benefit bank looks like. Now we need to come back in and sit with your employees for 15, 20 minutes each. These are individual employee benefits. So there is a few underwriting questions. We're going to ask them about their salary. There's some things that we want to have a one-on-one conversation with them and then get them enrolled in benefits. After that, the employer is going to get a bill at the end of every month that they need to pay with the money that they've taken out of the employees' paychecks and or the benefit bank. And that is reconciled on our end. So it really is just them taking the money out of the employee's paycheck or sending in what they've done in a benefit bank and paying that bill at the end of the month. When it comes to claims, we help them with that. Sometimes we may need additional information from an employer, but not very often. If an employee has a question on their benefit or don't remember what they signed up for, that's us. So there's not a lot of administration. It doesn't take a lot of time, but it allows an employer to say, I offer these benefits. I've rounded out my benefit package. I've made sure that they have everything that they need. And that's going to help me when I'm talking to new hires. Myth number 4, the employees don't value the benefits. While most employers believe that employees value take-home pay over benefits, employees actually value non-medical insurance benefits and voluntary benefits more than employers realize. And again, we know that because we sit down with people at the group and we talk to them for 15, 20 minutes, and 40 to 50% of them will sign up for benefits because they don't generally have access to those benefits outside of work. Most of them don't realize how to go online and look for a disability plan or how to get life insurance, or don't look for life insurance because they think that the cost is just way out of their price range. So a lot of people have never had that conversation with a benefits counselor to sit down and say, okay, here's what I think I need. Can I get it? And then also that it's portable and they can take it with them so they don't lose the coverage when they leave the company. So voluntary benefits are really, really important. They've been more and more important as we've gone through the rise in health insurance and the rise in the deductibles. But if you have an employer who is not offering disability or life insurance or dental, I would say that that's an awesome place to start. And then, we'll talk about the benefit bank and see if they are willing to add anything to what the employees get. And like I said, if they don't, the employees can pay for it themselves. But again, 40 to 50% of the employees sign up every time we do a group. So now you have a client, one of your clients has come to you and says, hey, that looks great. What do I do? How do I do this? I'm going to ask you a few questions, like, do they have another carrier that needs to be replaced? We have that happen all the time where, you have a client, maybe you didn't know that they already had a carrier in there that was doing voluntary, and your client says, we have it, but we haven't seen that person in 3, 4, 5 years. what benefits do they already have in place? So we're comparing apples to apples, and we're getting them the same benefits that they already have, and maybe adding something additional, but we want to make sure that we're not taking away something from somebody. What's the budget for the benefit bank? Sometimes I have companies that have no idea where to start, and other times I have companies that say $350 a year for every person, or $500 a year, or $20 a pay. So we're just going to kind of narrow down, what's the budget, and then are we giving this money to everybody? We just recently did a golf club that wanted to give the money to everybody, but wanted to give more to their full-time people and less to their part-time people. So basically, just what are we doing? How are we working this out? And then we're going to talk about enrollment strategy and a timeline. Excuse me. Are we coming up on their open enrollment, or is this, outside of open enrollment? Do we need to get this in our schedule to have somebody out there to sit with the employees for a 10-1? Or, do we just go past their open enrollment? And so we've got some time to kind of look at this and figure out when are we going to enroll. Also, where are they? Do we have 30 people in one location? Do we have 30 people in 30 states who work in call centers? Do we have 5 states that we're working with, just so that we kind of know, as far as our strategy and our timeline, where are we going? How much time do we have? And how much time is it going to take us to set it up? This is a piece that I like that kind of talks about the implementation and the enrollment. A lot of times when we first speak with brokers, this can be kind of overwhelming. They're looking at it as there's a lot of work here and I don't have time for this. The good news is that you don't have to do anything except for talk to your clients, which is the prospecting piece of it, and then the acquisition, which is to kind of help us set up what are we doing, the questions that I just said. What do they already have? What benefits are we looking at? The client setup, the implementation, the enrollment, the billing, that's me. The enrollment tools, we have digital postcards, we have websites that we can set up, we have flyers that we can send out, we can do emails, we can do text messages, that's me. The enrollment, so are we in 5 states? Are we in 30 states? Do we need call center? Do we need to web enroll? Are we going on site? That's figured out on our end. Are we using technology? URL is doing Employee Navigator now for all of you who are interested. So we do hook up to Employee Navigator. That's me. I'm setting that system up so that they kind of talk. Well, me and you, if you're building it. And then post enrollment. What do we need to get back to the client? We're going to talk about new hires, re-enrollments, talk to them about their first bill that's going to get emailed to them. How does that work? What's it going to look like? Who do we need to set up on that system? Sometimes we have one HR person, but then we have a controller who also needs to be a part of that system. So the 1 and the 2 are pretty easy. It's basically talk to your clients. Do they have voluntary benefits? Would they be interested in talking to us? I'll go out with you. We'll sit down. We'll just have a conversation about what are they looking at, or what do they already have, and then a little bit of help from you as far as bills and what kind of benefits they already have, and then we get rolling through the enrollment. Benefit counseling, again, we do I think we have about 5,500 benefit counselors at this point nationwide. A lot of my groups are Pennsylvania and 3 other states, 4 other states, 5 other states. The one that I just said, we have 900 employees in the last group that we did that are in 6 different states, and setting up call center and web enroll and on-site. Our benefit counselors do all of that. So one-to-one benefit counseling sessions with all 900 people, just in different ways to suit their schedules and their needs. The benefit counseling, to me, is the most important part of what we do, because these employees, most of them do not understand benefits. They don't understand the difference between a term life and a whole life plan. They don't understand why they need a disability plan when their employer offers a disability plan. So that counseling session is, again, the most important part of what we do to help the employees understand the why, what it does, how it works, what it costs, and then that they can keep their benefits and take them with them when they leave the company. So they, putting money into something like that you're going to lose when you leave is kind of hard sometimes. So to have something that you say, okay, I'd pay $3 a week for this life insurance because now it's mine. I'm keeping this. I get this forever. And so we're at the end. So our next webinar is September 14th. We're going to talk about fourth quarter. I know September 14th sounds a little early, but I think we'll already be in fourth quarter when that happens. And we'll talk about, as you're going through your renewals and new clients are coming back to you and you're finding opportunities, how you can use the voluntary benefits as a way to gain some wins.
Excellent. Dena, thank you so much. Let me just check the chat feature to see if we have any questions. So we do have a question from one of our agent partners. He says, in your experience, is it best to introduce Review Voluntary with a group's medical open enrollment or off that cycle and use it as a touch point throughout the year?
We have found that it's generally better to do it off cycle if we can, only because we have, you're going into open enrollment, you're adjusting their plans or tweaking what they already have or taking something away or adding something or going from one health insurance to 3 health insurance plans. Maybe you've added an HSA, an HRA. Voluntary benefits, by the time they sit down and talk to us, it's like deer in the headlights. They're just done. They're over all the decisions that they've had to make. So we try to do it off cycle if we can. However, I will say that, you get into a manufacturing company or an HVAC company and they say, you know what, we're working on a concrete company right now. They're doing a group meeting one day only for 4 hours, and that is it. So, if you have a company like that, sometimes they'll say, hey, listen, we're bringing these guys in here one time and that's it. So I would say try to do it off cycle, but if we can't, we can't. Then we do it with open enrollment. We coordinate it with you. What are we doing? How are we doing it? When, where are we going? And make it work.
Excellent. Thank you. So another question that I've run across is, can I use my benefit bank for all of my benefits?
The benefit bank works, again, like a bucket of money. So yes, you can use it for anything. You're basically, as an employer, giving everybody $20 and saying, hey, use this for what you want, or use this for the disability only. So yeah, you can use it in any way that you want.
And obviously from the flow chart and everything, it looks like it's very easy to set up. And
it is.
The process is very simple.
It is.
So again, everyone, just, reach out to myself or to Dena if you have any questions or any groups that you think it might be a good fit for. Please reach out. There's no harm in looking at it. So I really, just want to say thank you to Dena for putting this on for us. And we just look forward to doing more business with everybody. So thank you so much. I hope everybody has a great day. Thanks.